Here's your updated crypto weather forecast over here on the right. Since yesterday, the short-term timeframes have moved from here to the current spot, and short-term timeframes yesterday were roughly here. They have moved clear over, or the micro timeframes have moved clear over deep into the green zone. However, these two movements together are still not strong enough to even budge the midterm timeframe. This has remained unchanged per one of the situations I went over yesterday. Although a bounce was not the most probable thing to happen at, I believe, 14 minutes and 20 seconds yesterday, I did say the following. In any price movement that goes up to that weekly 10, it's still likely to go down. If price goes right up to that 10 and bumps its head on it, the moment it touches it, it's still more probable price is going down. Hopefully I'm being super clear here. All right, and I did anticipate this as a strong possibility, particularly because the third tool that I said in that video seems to be working the best, but I anticipated it was going to stop working because of the stock market. It was looking horrible. It had permission to bounce and was on top of. Let me go to the I'm gonna go to the 2-hour chart to see this. Take off the EMAs. It had used this as support a couple times or just once in here, and I said it has permission to bounce either to 40, I think I said 41.3 or up to 42.5 to 42.6. Those were the targets for the next bounce. And look where the weekly 10 is. It's under the weekly 10, this red line. Therefore, the midterm and long-term time frames cannot budge until price gets both above it and back below it. In this video, what we're going to do here is I want to show you why I consider the micro time frames deep into the green, and go back over the conditions I said specifically for the short-term timeframes to become neutral, which happened almost exactly as I drew out using the 4-hour RSI. But the point of this video is I want to give you another tool outside of the tools I gave you yesterday, so you can have one more thing in your basket to keep an eye out on price, and so you have another way to judge the charts in terms of who is winning the war right now on short-term or midterm timeframes, the bulls or the bears. Are you ready? Let's get it. All right, first and foremost, I'm going to start off with the easy stuff, the micro timeframes. Here's an easy way to judge the bullishness of a set of timeframes. So the micro timeframes I consider 5 minute to 1 hour, right? And the reason I think that this is deep into the green zone is because I'll take the smallest time frame and the largest time frame within that set. So I said 5 minute to 1 hour. I will use the 5 minute for one thing and the 1 hour for the next. And if both conditions are met, therefore it's deep into the green zone. On the smallest time frame, do you have still higher highs and higher lows? Yes, you do. Check mark number 1. I'll go to the 1 hour, see where my cursor is up here. I'll go to the largest time frame within what I consider personally the micro time frames. Is there any bearish divergence on the larger chart? And no, there's not. You're making higher highs in RSI as you're making higher highs in price. There's no bearish divergence. Therefore, the lowest time frame is still maintaining a higher high and higher low structure, while there's no bearish divergence, at all on the largest time frame. Therefore, the micro time frame is deep within the green section. That's the easy part. The midterm time frames that I mentioned, which I consider to be, something along the lines of roughly, 1 hour to 4 hours here, or the short-term time frames. I apologize. Short-term time frames, roughly, 2 hours to 4 hours type of deal. Is I mentioned yesterday on the 4-hour chart that, and I drew it. I tweeted about this. I made a tweet. I actually drew this out almost perfectly. Besides this juncture here, I didn't anticipate a sideways juncture. I thought it would come straight down. But anyway, I said the 4-hour RSI. I think it was right here. It was on this tick where. Actually, no, it was on this tick here before it was complete. So it was this tick. I said, in order for the midterm time frame, the short-term time frames to be neutral, which is roughly the 4-hour chart, it needs to come above, come back and touch the EMA or the white line, and close. So not just tick above, but the 4-hour candle on this tick has to end, and the new extension of green has to begin in order for things to be neutral. And that is exactly what has happened. I just drew over it. It's you can look at it on my Twitter, and if you don't follow me on Twitter, it's with the second most recent tweet I did. It's cosasverdes with the number 2 afterward. Cosasverdes, which means green things. Cosasverdes with the number 2 afterward. Make sure you follow me on Twitter for frequent Bitcoin and cryptocurrency updates, so you can compare this. All right. Therefore, the conditions to be neutral, at least neutral, on the short-term time frames has been complete. And again, it's very important to realize that nothing significant can change for the other higher, more important timeframes until the weekly 10 is prices above it and has used it as support. I cannot stress that enough. That is a recap from yesterday's video per what has happened. And please note, I want you to realize that this pump up, I mentioned very specifically, was not the most probable. But I went over this specific scenario, anticipating it as maybe the second or third most probable, because the one of three tools that structural analysis tools that I used, it was indicating that it has permission to bounce, right? And therefore, it was probably a top two or the second or third most probable thing to get a bounce today. That's why I covered it extensively. And remember, this is something that I can't stress enough. It happens roughly at about 14 minutes and 20 seconds is where I say. And any price movement that goes up to that weekly 10, it's still likely to go down. If price goes right up to that 10 and bumps its head on it, the moment it touches it, it's still more probable price is going down. And in that little rant there, I just tried to get people to realize, I even said a 12-hour, I think I said $1,200 or $2,000 or $1,200 1 hour candle, which is how I guessed that it was going to be initiated. Let's see here. So 39.7. That's a pretty good guess. That's $1,300 1 hour. That was a pretty good guess. But a lot of times, a race up to the weekly 10 starts off with a massive 1 hour green candle. That's just, I don't know. It's very common. It's kind of why I said it. So people didn't get excited specific because I anticipated it as the second or third most probable, even though I don't think I specifically labeled it as such. But I went over it in detail and said with a lot of emotion behind it, as you saw, don't get excited. If it's under that 10, on its journey up, as it bumps its head, it's still more likely that the midterm and long-term timeframes are just going to roll over and things are still more probable to the downside overall. And see that, and we're still a fairly good distance away from current price to that 10. We're still 2.5% away. Now for Bitcoin, that's not a lot of percentage, but it's still under. It hasn't even hit its head on. Therefore, there is still nothing to be excited about. Although the midterm timeframes did go from deeper into the red over to the neutral zone, and the midterm, I keep saying midterm. The short-term timeframes, roughly the 4 hour chart, has gotten to the neutral zone, but that is still not strong enough to manipulate or to cascade strength into the larger timeframes. All right, here is another tool that I want to give you that's going to help you, I don't know, analyze the charts in a fresher way. It's not necessarily nuanced or something that you have never seen before. A few of my videos, I say, you won't find this anywhere else on crypto YouTube. What I'm about to show you is not the case, but it's a very simple tool, extremely simple tool to keep yourself calm, especially in light of, $1,300 1 hour candles. But before we do, if you haven't checked out my Discord, there's links to that in the description section of all my videos. And that is a place where you can join and hang out to turn on your camera and microphone up to 8 hours, or 8 hours up to 8 hours. Actually, it is about 8 hours, 8 times a week with your camera and microphone on to ask me questions directly and live. And if online communities are not your thing, but you want exclusive content above and beyond what you see on YouTube, click the join button that's right below this video. It's right below it, and another short video will pop up describing your options to you. All right. Therefore, not a ton has changed since yesterday's analysis, but, and again, focus on this weekly 10. Is price above or below it? Has it used as support? No and no. Therefore, not a lot's changed. Assume down. Assume pressure down still. Okay? All right. I'm going to go to the daily chart, use just normal EMAs, but I'm going to use the 10 and 200 EMA. Let me take off my third structural tool, which is the one that actually is getting things right on Bitcoin right now. It's the quarterly. It's the quarterly trading channel, right? It's a parallel trading channel. It's getting things very, very, very correctly. All right. I can even take off price. When red goes below orange, so this is the daily 10 in red, daily 200, so 10 and 200 on the daily, exponential moving average. This is a very bearish moment when red goes below orange. Oftentimes you get a massive reaction when red goes back above it. So this is a bearish squeeze play over here. So a bearish squeeze play and a bullish squeeze play. The reason why this is so important is because the 200 interacting with the 10 on the daily often is a precursor to what is going to happen. Listen to what I'm saying. It's a precursor. It gives you a heads up, often with fake outs like we're seeing now, but it's a precursor to the weekly EMAs crossing in a very bullish and bearish manner. Let me throw on the weeklies over this so you can see. It often aligns fairly closely. Let me throw on the 21, the week. So these are weekly EMAs. See how this crossed to the downside? The daily EMAs crossed to the downside, and then the weekly crossed to the downside. You see that? So daily crossed down, weekly crossed down. This was a precursor to here. This could have been a fake out, and price went up, therefore this never would have crossed, but it gives you a heads up of what, like big signals that are getting ready to be triggered in algos, right? Because weekly 10 crossing below the weekly 21 is very, very bearish. I mean, it often means bear market in Bitcoin land. And we can go back and test that real quick. Again, so the let me take off the weeklies. This red on the daily going above the orange on the daily, 10 above 200, is a precursor to what could happen soon on the weekly. Therefore, I will put a pin in where this crossed. I'll put it right there, and I'll take these EMAs off. I'll put on the the weekly 21, weekly 10, and you can see they have not crossed yet. So the where this pin is, just because the 10 goes above the 200, it doesn't mean these two have to cross, because it could be a fake out. It could be, which as of now, it kind of looks like that was a fake out to the upside. However, it does give hopes that it can translate into this massively bullish cross above. When red gets above yellow, these are weekly EMAs. That would be a weekly bullish cross. And my community, you know, back in March and April, this is what we were making our money off of. I mean, you as a community searching for this stuff, it gets extremely powerful movements. And a lot of times Bitcoin gets it first, then, you know, large cap altcoins get it second, then your mid caps get it, then your small caps get it. So we're essentially playing mid and small caps that hadn't quite gotten that yet. Hint for perhaps 2024 when all that starts happening again. It could happen for a short-lived period before then, but I'm thinking later this year is possible. But man, I'm almost thinking 2024 is when that party's going to start again. All right, so there's a secret tip for you. You might want to jot it down. Okay, now let's take these back off, and what I wanted to show you here is, with in mind, it's often a precursor to a larger, more important cross. Actually, I can take price back off. It's not really good when the 10 goes above and immediately goes back below. Let's look at all the other times that this has happened. All right, so it went above and did not go back below, got continuation. So that didn't happen, and it was good. Here, it got above, did not go back below, and things were bullish. Here, it went above, and when it came back down, what? It was bad. That was capitulation. Okay, that was a capitulation. Let's put on price. Capitulation. Massive, massive drop. Not even from the top. Let's just say from this lower high. That's still a 58% drop. It's bad. I mean, to recross it, folks, it's really, really, really bad. All right, take off price. Here, you crossed above, crossed back below. It should be bad. And you had a big drop. Let's say from the first lower high, you had a 32% move down. So we have 32% and 58%, okay? It's not good for this to happen, I'm telling you. The red crossed above and did not cross below. Therefore, things stayed bullish. I mean, look, like this is almost like 100, like this is almost foolproof here. Crossed above, came back below, what happened? Bad. Crossed above, went back below, what happened? Bad. Crossed above, well, that just skimmed. So that just skimmed under, I'm not going to count that. But it's still the same concept. It was bad. Like price went back down fairly aggressively, made lower lows. It wasn't lower on the wick low, but these closings on the daily were lower. Closings on the daily were lower, right? Each time it went above, went back below, you got a lower low. It happened slowly on a couple of these instances, as opposed to March 2020, where it just capitulated 58%. But each time, it's bad, all right? Have we found one instance where it wasn't bad? No, we haven't. We have not. Like, not one, okay? Here you go. However, it can also signify that you're getting close to being done. So, I mean, at least in this market here, in 2018, it didn't mean jack shit. It just, like, it wasn't even close to being done. But in this cycle, it did indicate it was the last time. So, essentially, the bear market was close, but it was still bad. It was still bad in the midterm and short-term timeframes. So, it crossed above, crossed back below, and price, it was bad. You made a new lower low. So this low, much lower than that low. From lower high to the bottom, and again, I'm measuring from the lower high, not the peak, like the top. Lower high to bottom, 32%. So we have, I think, 3 or 4 of them in the 30s and one that was 58. Once again, take off price. You went above, cross back below. From lower high to bottom, you had what percentage in drop? 58. So we have 2 58s and a slew in the 30s. Okay. Therefore, this has a 100% hit rate as of now in modern Bitcoin price action. Okay, since 2013 and later. Okay, the 2009 to 2011 were kind of weirder. So I don't even think I want to look back that far. But in recent Bitcoin history, since 2013, it's got a 100% hit rate. Does it guarantee that things are going to be bad this time? No. Does it mean it has a 90% chance of making lower lows over time? Not necessarily. But you can bet your bottom dollar it's well over 50% chance that it's going to be bad. You see what I'm saying? This is one easy tool to keep yourself calm when you're zoomed in on the lower time frames and see a $1,300 candle. You're thinking, oh, we're off to the races, right? And I did a Twitter poll asking people, what do you think is going to happen from here? And I think it was 20% of people think that we're going up from here. Like, this is a bullish sign. And they could be right. However, on a statistical basis, it's not likely. And if you're going to make money over time, you just have to trade with the probabilities. Like, what is probable? Trade that way. If nothing's probable, which on my channel I say that all the time, when things are in the middle of the range and you can't quite tell, I let you know that there's no edge either way. And the edges start formulating up and down, when this condition happens, right? And therefore, it's best like either not to trade or trade both ways to hedge your bets, right? To learn when to let go. Something we go over on the Discord community, how to essentially hedge bets. And a lot of the community members have come up with ways that are better than mine. I just had a VIP today. Actually, a team leader came up with a freaking brilliant idea that I'd never heard of before, how to hedge your bets on stuff. It's something I might implement in my personal trading. But anyway, I'm not going to mention what it is on YouTube. But the community itself gives a lot of ideas on that type of stuff. Anyway, let's... using the same type of EMAs here on the daily, another general way, let me even take off the 200 EMA, which is a more long-term signal for being bad. The red, cross below, orange, it's probably going to get some playthrough, right? It's like, yeah, it's going to play on the radio for a long time. But for shorter time frame stuff, on an emotional basis, when you see big 1-hour candles and you think you see breakouts, but price is under the daily 10, you have absolutely no reason to be excited about anything. Things are still falling. That is the basis for falling with style. If you're not above the daily 10, you're still falling. No matter what. No matter how big a 5-minute candle is or an hourly candle is. If price is below the daily 10, things are fairly bearish still. Which is indicative of the weather forecast, how the top two, the shorter time frame, short and micro, even though they moved closer to the farther bullish, it's not strong enough to budge the weather forecast or the needle. Can't budge the needle on the other two time frames, and this is indicative of that. But this is one easy way to always keep yourself in check, especially if you're focused on the lower time frames. Is it under the daily 10? Well, it's very probable this is a corrective bounce and it's up, and that means it's not going to be a big rally, or it's not as of now, it's very improbable that this is either a recovery bounce or a large bounce. It's more probable that it's going to bounce, maybe wick above, maybe have one day close above, another day wick up, and then comes crashing down. It'll fail the line or get rejected from the line. As of now, those two things are more probable than this becoming a strong bounce or a full-on recovery. Does that make sense? Under the daily 10, you shouldn't be excited in a bullish fashion. All right. If you missed my video from yesterday, go ahead and click this video right here. I give you some pretty powerful tools. And if you want to go ahead and learn a couple trading psychology tricks that you might find helpful to keep yourself emotionally in tune, go ahead and click this video right here. I just made it today. You just got 𝐶𝐤𝐻𝐼𝐴𝐷 worldwide. Peace.